up, Facebook fam? What's up, HTA community? Glenn and Reed here, coming at you for another Trading Topic Tuesdays. Happy Tuesday, everybody. Hopefully, the week's treating you good, and hopefully, the market's treating you better.
Oh yeah.
So tonight's topic, it's a good topic. You know, we're tapping into the different, it's like a different aspect of trading, right? Where we're talking about how people may be redundant or hesitant to pull back or to trade, to make any trades. We've titled this "Pulling the Trigger," and we want to set the boundary here, like the context of this, right? So, say for those people who are starting their trading career, they probably made some cool trades. They want some money. They're on a new high. They're like, dude, bruh, anything I touch is gold. Okay, any stock I see or coin I see, and I buy it, it goes up only. And then after a while, they continue down that path, and the market comes and just slaps some humble pie on you, right? And you feel the pain, you feel the just defeated. You feel defeated, right? And so now when you go see a coin, the charts, or you look at the market again, some things that might come up into mind, but like, I don't want to feel what I felt weeks ago, months ago when I lost that trade. All right, so you come to a screeching halt a little bit. You maybe even just it's so bad where you just quit, and that's something we don't want you guys to do, right? So anything to add on that intro, Reed?
Oh man, yeah, it's a common factor, fear of losing more money.
More money.
Yeah.
More money. I'm going to share screen. Pulling the trigger. So boom, courtesy of our professional graphic designer, lead graphic designer. It's wonderful, wonderful graphic here of what's his name again? Shia.
Shia, Uncle Brother Shia.
Get the Transformers in the
Yeah,
background.
Shia LaBeouf.
Just do it. So that's
Man.
yeah, just pulling the trigger. You know, when you're hesitant, just think of this guy in his video. And so, where we dive into the aspects or perspective of pulling the trigger, right? Some people may be experiencing this cycle. You can see my screen, right?
Can.
Okay, cool. So some people may experience this cycle where we start over here. They're already in the markets. They lost some money. So next time when they see an opportunity, they may be scared to pull the trigger, right? And say you're like, oh, look, I saw a good opportunity to buy X stock or X coin on Monday, and then you didn't. You just hesitated the whole time, and then you pull up the price the following day or following week, and you made the right call, right? It's going the way you want it to go. So you beat yourself up. Like, dang, I shoulda, I coulda, I would've, if only. And then you're gonna beat yourself up. You're telling yourself you made a bad decision by staying out of the trade, or if you did get into a trade, maybe you were forcing it or whatever. You made a bad decision. You end up losing either actual money, losing your mental capital. You take a break, and then it just repeats, and this is a vicious cycle for people to experience. Some people may be experiencing this with gambling. Some people may be experiencing this when they're first time investors.
Crypto.
Crypto. Oh, crypto is like
Huge.
Vegas
Yeah.
on steroids, huh?
Yeah.
So we talk about the roadblocks in pulling the trigger. You want to go over this?
Yeah. So some roadblocks that you find in pulling the triggers, what prevents you from pulling the trigger? Why don't people get into the trade? And usually it comes down to a few things only. It's um, oversizing your position and you're risking too much. So that could be like you want to make up for your lost profits, or you want to make up for a position that you missed. So you oversize your position, and then or you oversize your position before you even got into the trade, and now you're afraid to risk the same because you've lost so much. So we'll go into solutions further down, but what happens is you start breaking your own rules and you start having more fear of missing out. So you risk more to make up. Again, it's just a vicious cycle, as we just talked about. On you miss a position and you over risk it, and you miss a position, you over risk it, you lose a lot, then you take a break, and you're like, okay, I need to make up for it. I know this one's going to be good. This trade is going to be good. So you over risk, and then you lose that position. So this is a huge roadblock in trading, and the hesitancy to pull the trigger to actually enter the market is just over risking your on positions.
Yeah. And just to clarify, what we mean by pulling the trigger mean entering a trade, taking participation, taking action in the markets, um, putting your money, leveraging your money to go and make a profit. That's what we mean by pulling the trigger, just acting upon, right? Acting upon. If you see an opportunity, act upon. So that's good stuff. So let's make a continuation of the roadblocks. And
Take
so,
it over, and take it
yeah,
over.
you don't want to feel like you're forcing the trade because maybe it's a different pair, or like you just, like, if your mental game is not there and you're on a break, a trading break, but you're looking at the charts, and as you're cycling through your watch list or different pairs, you're like, you just want to see something screaming at you, be like, click me, enter, right? That's kind of like, that's personal experience. I've gone through that. Um,
And
and another roadblock is when you're hoping more than being confident. To clarify on that, when you're entering a trade, say you're putting in the order and whatnot, your confidence level isn't where it should be. Your confidence is here where it needs to be here, and then the rest is hope. Crossing the fingers. And so we're gonna dive into the solution on that with knowing your plan. I mean, you see that there on the slide. Looking for the perfect setup. That is a good one.
no
That
such
one.
thing as perfect in the market.
Brad, took me some time to figure that out, Brad.
Same here, man. Same here.
There is no perfect setup. I mean, um, we're over here helping educate and stuff, and we'll share our setups or entry points or opportunities that we're looking for. A lot of the charts, a lot of them aren't the same. You may not see the same perfect setup to the T. You're gonna see similarities, but if your expectation is perfection, then that's something that's gonna continuously hold you back from entering the trade confidently, right? And
Yeah,
the last
just
one,
to
oh, go
I would
ahead.
like to go off of that one though. Is perfect setups. An example that comes to my mind is a head and shoulders pattern in the market. When I was first learning about trading, I was studying head and shoulders to the T, and I would miss on so many opportunities because I was like, oh, this right shoulder doesn't look like how it's supposed to look like in the example of head and shoulders. But what I realized is the shoulder could be far left, tight middle, and tight right, or vice versa, where it's far right and it almost looks like a hunchback, like a hunchback of Notre Dame, and it's like really off shoulders or really off areas. So after you learn that technical aspect and you really got it refined, you kind of want to dumb it down and lower your expectations of how, for an example, head and shoulders should look like. Because, and I found that helped me in my journey so much, is to realize that, oh, it doesn't have to be the perfect setup that you see on Google Images, because you Google trading patterns on it, Google, and it'll show the perfect examples of what you should look for. But really, it's almost like a clay model. The market molds that clay, that setup, to its liking. You just have to be aware, like if it kind of looks like it, then maybe it is it. So that's just something going forward on kind of being flexible with your approach on perfection.
Thank you for that. Excellent
Yeah.
example. Excellent. And the next point, people always want to buy low. The cheap. They want to buy cheap. They want to buy on sale. They want to buy discounted. They want to buy Black Friday. Waiting for the bottom. That expectation, that right there, you're gonna see that commonly with a lot of people. I mean, that those are things that you want to address internally, and a lot of it's getting uncomfortable. It's growing, right? It's starting to. You have to, if you have that perspective for yourself, and you're always looking for deals, right? And this goes beyond trading. If you're making a purchase at the grocery store and looking for only sale items, you know, that's how attached that idea or concept is with you, and so it's going to carry on. It's going to carry on to trading, right? And when you see the opportunity, the market's moving, you're going to not want to get in because, oh, it's too expensive. Oh, I want to wait until it's X amount. And then what happens? What happens when you okay, sit out, right? Whatever is fine. Then what happens? You're gonna find yourself in that vicious cycle earlier.
You know, Bitcoin comes to mind with that. A lot of people, myself included, saw Bitcoin hit $20,000, and I'm like, oh wow, that's crazy. I'm just gonna wait for a pullback. And then in the next few months, it hit $60,000. And then you're like, oh my God, I wish I bought at 20,000. So it's just, you can't call, no one can call the bottoms, or it's usually hindsight, you know? So, I mean, that's just something to keep in mind there.
Mr. Alexander Elder, right, the author,
Mhm.
he quoted the people who consistently call tops and bottoms. He knows their names. Liars.
Yeah. Amen, man. Amen. That's why we trade in probabilities. We don't know nothing.
Nothing. So those are the roadblocks, right? Those are the roadblocks in pulling the trigger. You may find yourself dealing with one of these or multiple of these, but don't worry, right? Like now you're like, okay, reading Glenn, I checked 3 out of the 7 boxes you're talking about. Okay, cool. We're gonna help you there. We're gonna help you. Okay. So, in addition to these different points, pulling the trigger can be harder in different phases of your trading, you know, meaning it'll be mentally harder to enter in a position during a losing period rather than a winning period. And that's another key concept or something to be aware of as you go through your journey, getting out of the losing slumps. I mean, we're not here to tell you you're never going to experience a losing period, because that everyone does, right? Big hedge funds, professionals, they will experience losing periods, but they're very great at minimizing those losing periods, and so that is the goal for that. And getting back in the market action during those losing periods, those slumps, that's a key thing that everyone will get to and experience, but you are the only person who can control how you get out of those slumps and to re-enter the market. How to overcome the fear of pulling the trigger. So these are some points that we're providing to help you guys gain some confidence back. That's essentially it. Just to sum it up, man. So know your plan. Back test if you're not confident. Look over your losses. Do some self assessments. Journal. Right? We talked about that many times throughout our topic Tuesdays. Know your plan. Are you within in a statistical drawdown period?
Ooh, that's a good one, man. Know
Statistic.
your stats. If you know your stats, if you know how many losses you get in a row, then you're okay. If you don't know that, if you don't know those stats, then it's take a harder look at your journals.
Mm. Mm-hmm. Keep risk management as a priority. Before you call yourself a trader, professionals consider them risk managers, aka money management, right? Money managers, fund managers before we are traders. So keep your risk management as priority. Um, that's key, man. Just monitor, limit how much. Wait. Let me rephrase this. You cannot control how much money you win in the markets, but you can control how much you lose.
True say. That's gold right there.
Yes, yes. So another way to help overcome the fear of pulling the trigger, be like, Glenn, I just started out. I did lose some money here. I'm 6 months, 1 year into trading. I'm trying to save up money for more capital to go build my account. Cool, dude. Totally get it. Totally relatable. So this is what we recommend you could do in that scenario. Continue to trade demo, right? Or stick to your live account but trade at the very small lots or size or the minimum size you can do if it's live. Okay. The goal is not to make all your money back that you lost. The goal is to gain your confidence back. Get your mojo back. Get your game on, guys. That is the goal when that's how you overcome the fear pulling the trigger.
Absolutely.
So go to demo if needed. You're gonna see many people they use that in their own way of prop firms. I think One Good Trade. I think they have that. If you're hitting a certain losing point, then immediately go to demo. Own all of your trading decisions to wrap it up, man. Own all of it. Own the wins. Own the losses. You'll continue to make mistakes, forgive yourself, and continue on. Man, how do you elaborate on that, Reed?
Yeah, so story comes to mind. This guy Ram Dass, he's like a spiritual guru, and he was out here in Hawaii, Maui. He passed away in Maui. He was writing this book called How to Help People, and in the process of writing this book, he ran out of paper. So he goes to a store, and right outside the store, there's a homeless man who needed help, like with walking or something. He wasn't even asking for money; he just needed help. And he's like, oh man, if I stop and I help him and get his crutches and stuff, I need to get this paper. I need to get my ideas down on this paper. And so as he's writing back, he's like, I needed to help this guy and hurry up to write a book on how to help people, but I didn't even help that guy. And so he said, I don't live every single day beating myself up about that. I take it, I learn from it, and try to apply it to do better in the future. So, I mean, that's just it's so correlated with trading is you take a loss or you make a mistake, you were fat fingered a position or something. Don't call yourself stupid or dumb. Learn from it. Know what type of frame of mind you're in. There's always lessons to be taken away in your losses. And if there's not, then awesome. You should be able to move on just like that, real fast, real easy. Because sometimes there is no lessons to be, if you follow your trading plan to a T 100% and you lose that position, just know, hey, okay, that's part of trading. That's it. And you just drive on. So that's something to just keep in mind. Own your decisions, own your mistakes, and it only makes you better.
Boom. That's
Yeah.
it right there. Fire. Wise words from the man himself. So
Ram Dass.
just to recap, we went over reasons why you may be fearful in pulling the trigger, entering a trade. We talked about the vicious cycle that traders experience. He talked about how in different scenarios or different environments, if you're in a losing period, it will be hard to enter, right? And then we shared about just the goal is to gain your confidence back from being beat down in the face from the market, right? That's the goal, is to gain your confidence back in your system, refine it, your performance, gain your mental capital back along with your financial capital. So that is the goal, and that was the some just to sum it up, the whole topic for tonight on pulling the trigger. You know, everyone experiences it. No one will just not ever experience it. Maybe there's probably one-offs, dude. Who knows, right?
Yeah.
Maybe Elon.
Superhero, super traders.
He don't care. Elon don't care. Yeah.
Thanks for tuning in, everyone. Thanks for watching.
Thank you guys. Give us a follow, hit subscribe, share it with your friends and fam. We'll be here next week, Tuesday, every week, man, until the markets close. Like, we'll be here.
Yes.
On that note, have a good one. Happy Tuesday. Signing off.